Hey guys, Tim Melvin of Banking on Profits and the Community Bank Stock Investor coming to you from down here in Central Florida on a Monday afternoon. We usually try to get these done on Monday morning, but I've been running a little behind all day, so here we are. It's an overcast day, unusually for this time of year in Florida. Rainy season doesn't usually start for another couple weeks yet, but we could use the rain, so why not? And we're inside in the office anyway, so let it rain, as they say. This week, I want to talk about Martin Whitman. Marty Whitman was a big influence on my life. I only met the man once for about 15 minutes, had a great conversation with him, but his influence on my life and investing style has been much bigger than that. I tell the story often of being a struggling young broker trying to figure out this whole stock picking and investment management thing. And there was a broker in our Dean Witter office who was really good at it. I mean, he was putting up some big numbers, and I think he was primarily a broker just so he could manage his family's money, family and friends' money, and that was the best way to go about it back in those days. Um, he lent me two books. One, of course, was Ben Graham's The Intelligent Investor, still the all-time must-read great investment book. But the other one was Martin Whitman's The Aggressive Conservative Investor. And the concepts he outlined in that book really made sense to me. They stuck with me, and they've been a huge part of my core approach to investing in the markets for almost 30, well, it is 30 years now. So if you don't have the book on your shelf, you need to go get it as soon as possible. Read the book. It will make you a better investor. If you have an interest in doing distressed investing, which is very much an art form, and you've really got to have a personality suited to those endeavors in the distressed field. But his book, Distressed Investing Principles and Techniques, would also be a must read for you in that situation. I've got them both on my shelf. I've read them both. As I said, they've added an enormous amount to what I know about analyzing companies and opportunities and managing portfolios. So hopefully they help you the way they did me. So anyway, Marty Whitman's real focus was not just on cheap stocks, although certainly he liked to buy cheap stocks based on asset value, but he really focused on that safety side of the equation. He believed, as I do, and as Seth Klarman and so many others do, that if you focus on the safety, you can't do anything about the price fluctuation risk, but you can take care of the corporate survival risk. Is this company well financed? And they survive long enough to thrive. And if that's the case, if you can buy something that's cheap, available at a discount to book value, a very low multiple of its earnings power, and it's got this margin of safety so the company can survive until things turn around, business gets good again, the market likes the company again, and the stock goes to several multiples of your original stock price, then you've really reduced the investment game to just a few simple equations. In fact, Whitman, once said that there's only 3 or 4 variables that really matter. Everything else is just noise. I believe that. I use that in my practice. Those of you that are subscribers know that we really only use about 4 factors in selecting the banks that go into the portfolios, and they've actually done pretty well with us. Whitman, by the way, was a huge fan of small bank stocks, and some of his shareholder letters back in the early 90s were among the things that originally piqued my interest in investing in small banks. That and the fact that we got paid extremely well to sell small bank stocks back then. They were easy to sell, and I'm lazy and I like money, so everything just kind of came together with the small bank stocks. But Whitman wrote exclusively about him in the aftermath of the S&L crisis. He talked a lot about small banks and smaller regional banks and community banks and how much money could be made there. And his predictions have come exactly true over the next 20 to 25 years of my career. So again, part of what we know about small banks came from Marty Whitman. So we have a huge debt and a large sense of gratitude towards Mr. Whitman. He also developed, he calls it net current asset values on stocks, or net stocks on steroids. Net current asset values, of course, being this system that Graham developed of buying stocks that traded for 66% of their net current asset value. Again, a very successful way of investing in stocks ever since he wrote the book back, many, many years ago, The Intelligent Investor, and it was also discussed in Security Analysis. Now, what you have to realize is net current asset values is a great way to pick stocks. However, this is not the 1930s or 1940s. You're just not going to find, dozens of these things to fill a portfolio. We come across ones once in a while that we like enough to buy. you'll see a lot of small and biotech companies and Chinese companies when you're on the screens these days. So you really got to be able to whittle that down and focus on that safety side when you find a true net current asset value bargain. Whitman adjusted that formula, and he adjusted it a little differently for real estate and REITs than he did operating companies, but he made adjustments that included other things besides net current asset values that could in fact be sold and used to raise cash very, very quickly. And he discounted some stuff that were technically net current asset values, like retailers' inventories, which may not actually be able to turn into dollar for dollar cash if the company is in trouble. We've seen that several times just here in the last couple of years. So his adjusted net current asset value formula is similar to one I still use today that is still providing very high rates of return. Now, let's talk a little bit about Marty's rates of return and what happened there, because this is an important lesson for us as individual value investors, and it's the size problem. Whitman, when he took over the fund, a couple $100 million maybe in the thing, maybe around $100 million. Those first 3 or 4 years, they were putting up numbers using his approach. They were doing 30 to 35% a year because he was finding more than enough bargains among smaller companies that met his very strict criteria. And were able to drive very high returns. But as the fund grows over the years, you can see the returns coming down as he's got more cash to put to work. So eventually he's going from the mid 30s down into the mid teens by the time his career came to a close in 2012. And we've seen that with dozens of value investors over the years, particularly those that focus very closely on asset values. That pool's just not that big. That's one of the reasons Walter Schloss used to send money back every year. He didn't want to get so big. He understood that scale was a problem. If you want to be the biggest, baddest kid on the block, you can't do deep value asset-based investing. There's simply not enough opportunities to invest 10, 12, 14 billion dollars. As you raise that much capital, you have to make adjustments. You have to buy stocks that don't exactly fit your criteria. You have to pay as much attention to the liquidity of the shares of the corporation, which, by the way, automatically removes one factor that drives superior returns, the illiquidity factor. So it's not really that it stops working. I read an article the other day about how book value is just, not a real accurate measure of value. That is absolutely not the case. The problem is right now there's just not a lot of stocks trading under book value because we're 9 years into a bull market. We hear that every time we get up here that book value doesn't matter anymore. Book value never really mattered for tech companies and some other asset-like companies, but for companies with a lot of assets that can actually be sold and turned into cash, and for financial stocks, it matters, and it matters a whole bunch. But that'll think it'll come back around in the next bear market. So anyway, a humble thanks to Marty Whitman for all the information and knowledge that he allowed us to steal from him over the years through his shareholder reports and his books. His modified or net current asset stocks on steroids and small bank approach have really been the driver of pretty much my entire career. By all accounts, he was a gentleman, although, maybe like me with a little bit of a salty mouth and a temper and really one of those damn kids to stay off his lawn. But he was a giant on Wall Street, and we feel very grateful to him. And please, if you haven't read Aggressive Conservative Investor, get it up on the top of your buy list. Speaking of small banks, kids, that's right, 6th takeover of the year. This was a bonus stock, symbol FAIT, up in New York, combining with RBB Bancorp out on the West Coast. They both serve the Chinese-American market. This is going to create kind of a bi-coastal Chinese-American bank. I'm going to be very tempted to take stock in this deal because I like the match of the two banks. I like what it does to unify the West Coast and East Coast Chinese-American communities. There could be a real earnings driver in this that lasts for several years. I got to evaluate the deal fully. I have not made up my mind, but I'm leaning towards taking stock. That's for subscribers. You other guys don't care, and you can't buy shares at this price now. Anyway, now, speaking of those of you that are watching this that are non-subscribers, our bonus stocks are returning over 30% a year since we started doing those. Our focused stock portfolio in the community bank stock investor is hovering in the high teens for the most part, as is the core portfolio in Banking on Profits, where we give you specific guided buy and sell advice, and we're incredibly rigorous about what we'll pay and what kind of banks we'll pay. It is a very low beta, high alpha strategy, and we've pretty much proved ourselves now that we're capable of delivering these returns in reduced risk portfolios. So my question is, why in the hell are you not a subscriber? If you are a subscriber and you have family and friends that you care about, why are they not subscribers at this point in time? So we'll continue to find the opportunities and continue to help you to make some money in the small banks. But those of you who have not signed up, you really need to. And those of you who have signed up, tell somebody. Anyway, appreciate that. Thanks. Anyway, on to baseball, the Orioles. Wow, what an awful baseball team. I wasn't expecting much, and this is still a disappointment. We've seen some flashes out of a couple of pitchers, but only Manny Machado's really hitting the ball with any authority. You know, our $120 million man, Chris Davis, is still striking out looking at his shoes on a regular basis. He's got, I think, 1 or 2 home runs so far this year. We're not paying you $20 million a year for 1 or 2 home runs a month. That's 1 or 2 a week is kind of what we'd like for that kind of money. So it's going to be a tough year. We're going to team's going to really have to improve, or we're going to be sellers at the deadline. And Manny will be gone to wherever Manny's going. He's gone at the end of the year anyway, because there's no way we can afford to pay him. But it's shaping up as a tough year for us Orioles fans. But still a lot of fun stuff going on in baseball. Bryce Harper and Mike Trout are reminding everybody that, yeah, Ohtani's kind of a cool story, but we're the superstars, because they are just crushing the ball, making the plays in the field, and playing like the superstars that they really are. The Brewers, just as I predicted, they're really, they're competing in the National League Central. They're one of the better teams in baseball at this point in time, and they're doing it with the bats, the speed, and the pitching, and it's been fun to watch for Brewers fans. So this week we do it. Ohtani is pitching against the Astros. We're going to find out if this kid's really that good here pretty quick. That's one of the toughest lineups in baseball. That's must-see TV for Tuesday night if you're a baseball fan. So write that one down. It's going to be a hell of a game to watch. So far, this is also the year of the strikeout. Let me make sure I've got this right. There's 14 starters averaging more than 11 strikeouts a game. Relief pitchers are getting 2 out of 3 outs on strikeouts this year. Focus on the long ball. The contact hitter is a dying animal, dying breed in Major League Baseball, because everybody's swinging for the fence with that new upward trajectory. Well, they're also striking out a lot. This is a record, all-time record strikeout pace. We're even ahead, still early in the year, we're even ahead of 1968, the year where pitching dominated to the point they lowered the pitching mound to give the batters a chance. I always say that had a lot to do with Bob Gibson, but that's just my opinion. But anyway, on the books, just about done the Ben Franklin biography by Walter Isaacson. Highly recommend this book if you've never read it. Ben Franklin, you get the image of him in history books and history books light, we'll call it, and from TV and the plays and even the musical 1776 about Mr. Franklin. But the truth is actually more fascinating and more interesting. This is one of the more interesting guys in American history. Now, what's been interesting to me is I'm kind of simultaneously, I'm finishing the Franklin book, but I've also been reading The Proud Highway, which is a collection of letters by a young Hunter S. Thompson, the king, of course, of gonzo journalism, and it really warps the space-time continuum when you discover in their writings, they think the same or thought the same way about a lot of things, including religion, personal liberty, worrying as much about the elite as you do about, the angry rabble. We see that in politics a lot today. You see both sides of that. Very little happening for the average guy in the middle, and that was something they both talk about in their writings. So it's interesting to see. You couldn't think of two people less alike than Hunter Thompson and Ben Franklin till you start reading about their thoughts and how they viewed life, and you realize they're, hundreds of years and thousands of joints apart, but they really think a lot alike. It's pretty interesting. Anyway, I've been super busy on the recreational reading front. There was a new A.J. Stewart book out in the Miami Jones series. Bill Myers had one out in the Mango Bob series. Now, this is the ultimate in I don't feel like thinking. I don't want to watch TV. I just want to sit here and read a book that takes me away from here and maybe makes me laugh out loud little bit. So the Mango Bob series, I think there's now 10 books in the series or something like that. They're all funny. They're well written. They're a fantastic read. Now, as far as laugh out loud a lot, the new Christopher Moore book, I finished that up, Noir. It's funny. It's fantastic. It's a great read. Buy it. You'll thank me for it because it's just fun. There was also a new Stone Barrington, and this Stuart Woods. That's an excellent series. Jeffrey Devers had a new one out in the Lincoln Rhyme series that I also enjoyed quite a bit. So, been kind of busy. Got a lot of reading done this past week. There's a new John Sanford out in the Prey series tomorrow. Really looking forward to that. And I have to say that the May and June book release calendars just look really strong. So it's going to be a great summer with lots of fantastic recreational reading. And we'll be moving on to a new nonfiction book as soon as we get this Franklin book all wrapped up. So that's it from here this week, guys. Not a lot going on in the markets. Last I looked, everybody was worried about whether or not we're going to break 3% on the 10-year. We probably are. So far, stocks are not really reacting to that fear. Jeffrey Gundlach is in New York at the Ira Sun conference. Apparently, he predicted something to the canon equivalent of the end of the world and Facebook falling off the face of the earth. Not sure what all that's about. But we'll be looking to see what the guy said at the Sun conference later. If I have any comments, we'll get them into the weekly review at the end of this week for subscribers. Those of you that aren't subscribers, well, sorry, sign up and read. And if there's anything interesting that came out of that, you'll find it in the weekly review on Friday. Anyway, guys, thanks for your time. Appreciate it. We'll talk to you next week as long as I don't get distracted.